This is the best limit order strategy for any IPO, and there's two classifications. One, hype and fast movers, and two, low hype and slow movers. Don't think just because it's less hyped and a slow mover that you can't make a ton of money. I'm going to start with the hype and the fast movers. Think of your Figmas, Circles, even your Klarnas, Geminis, and even something like Figure. Basically, what you want to do is you set your limit order for the buy open price, and when it opens, there's a couple things you need to look at. Basically, the number one rule, if it's a hype IPO, if it starts trading flat, you need to sell out as soon as possible in the first 5 to 10 seconds of it trading flat. Basically, why this is because this is pushed by supply and demand. Limit orders all go on open. So if there's a ton of limit orders, it should realistically push up the price. 90% of the time, it won't start shooting right down. It will trade flat or up. When it trades flat for the first 5 to 10 seconds, that means there wasn't enough limit order buying pressure to push the price up and enough selling pressure to keep it flat. So basically, you want to get out before limit orders go through, and it's going to start pushing down. This is what we saw with a little bit of Klarna after a 1% jump, and Figure, which made no room for profit, and I got out on a minus 1% loss. But like with Gemini, even though it's a trash company, it got pushed up right away in the first 5 to 10 seconds. And then it got halted, so you want to get out right after a halt or as soon as it starts trending down again. Because of supply and demand, more selling pressure, less buying pressure. And then we have the slow movers or less hype. This is going to be like your Via or your Figure or even Legions. Let's not use Figure, but for Via and Legions, they actually would have made you more money than your Gemini limit order. Basically with this, I like to split my buy order between one regular market buy and one limit order. What you do with your limit orders, you get in case there is a short-term price jump, but basically, if these open underneath its buy price like Via and Legions, the IPO investors looking for pre-IPO jumps are going to be disappointed and are going to sell out, pushing a small jump down 1 to 5%. Basically, this is where you look at the profitability and fundamentals of the company. If it's an amazing company like Via and Legions, this is when you get in. In the next couple days, the Via and Legions have trended over 20% to 10%. So that's basically how you make money on fundamentally strong plays that have less hype and are less interested in the market, and even the overpriced, hyped ones like Gemini that have no fundamentals at all. Of course, some of these might not exactly play the same out as this, and this is why you spread out your buys over multiple IPOs over a long period of time. At least while the IPO hype is here, a lot of people got discouraged, but honestly, profit is profit, which I'm still going to keep pushing videos and keep buying these IPOs with my specific plan for this. Pre-IPO is awesome, but if we keep getting 1 shares or 10% of our shares, that's not going to be enough profit. Just making a video to show you that you can make money off limit orders for hype or non-hype IPOs, as long as 1, there's hype, or 2, it's a fundamentally amazing company.